Hello, hello again, everyone. Welcome to another weekly review for the NASDAQ 100. This week we started trading um, on the 2nd of March and we ended on the 7th of March. So before we begin, let's just pray. God, we just give you thanks again for your blessings and for your goodness and for another trading week that has been successful. We ask that you'll just meet anyone watching this video. May they become consistent. May they find something in here that will help them to improve on their trading experience. We thank you and we praise you. Amen. All right, guys. So this week, again, I will say it again for the millionth time. I am forever bullish on the NASDAQ 100. Okay. For those of you who do not understand what that means, excuse me, and before you get into, all the debate and everything, all the market is selling and everything, remember, I trade the market from the larger time frame perspective, and I use my smaller time frames for my entries, knowing that the bigger time frame, the largest time frame sets the trend, the smaller time frames execute what's happening on the bigger time frame. Okay, so with that being said, this is what happened last week. This is all my activity plotted for last week, and I will show you why I was able to get bullish moves, although on the smaller time frames, the market was bearish. Okay, so let's start again from the top. Now, remember, my largest time frame is going to be my monthly. And when I zoom out to my monthly, I see that the trend is clearly bullish. What that means is my last 2 points have been higher lows, higher highs. Okay. All right. So this market is in fact bullish. Now, what will happen, as I've said to you before, when the market actually hits its high point, it has to retrace in order to create another low, another higher low before it actually starts buying again. So this is a time where you have to be patient and understand how it is that you actually take your trends in order to be successful. So going back down on your 1 hour time frame, that 1 hour time frame, as you would have noticed for the past 3 weeks, has been bearish. That does not mean by any stretch of the imagination that this market is in fact bearish. Because although you have a lower low on your 1 hour time frame, when you look at your larger time frames, all the way up to the daily, you will see that it made a new low. Coming from a higher high, it made a new low. Okay, that's not to panic. Yes, structure has broken on the daily. However, when you look at this point on the daily, let's say on the weekly, that new low has only produced a higher low on the weekly time frame. Okay, so you clearly see what's happening as long as your largest time frame still maintains that higher low, your trend is still bullish. Your smaller time frames will become bearish in order to fulfill your largest higher low. So if you look at your monthly, you'll see nothing has been put on the monthly as yet. Okay, will this continue to go down? There is a possibility for it to go down. However, there's no need to panic. One of the things with my strategy is that I am consistent in doing what it is that I need to do in order to trade my bullish setup. Now I'll show you how I do that. So, because I know the market is making higher lows and higher highs, and when I look at my 1 hour time frame, I see that the market is making lower highs, lower lows. Okay. All I need to do is to make sure that I'm taking my higher lows to my higher highs. Now, you've always heard me say that if you take a higher low, okay, on the larger time frame or any low on your time frames, and it goes up to make a lower high, that simply means that the market on that particular time frame is consolidating and it's still within a retracement. And so when I go in on my lows, I take my profit on my highs, and then I wait for another higher low. And then I do the same thing. If I get a lower high, I take my profit, then I wait for the price to come back down, and I keep doing that. What that does for me is that because I know the trend is overall bullish, and I keep taking my lows to my highs, eventually when structure breaks, I will already have been going with the trend. So it's only a matter of time before the trend actually breaks towards the upside, and then the move will resume to another all-time high. Okay. So real quick for this week, this is where the market start. I was actually in this trade from the Friday before, held it up, came up here in London session. This was probably about now, well, this was 9 o'clock. You take your profits right here in this zone. Okay, your trade is done for the day. Okay, so for Monday, your trade is complete. So you enter the entire move would have been from here all the way up to here. This move right here would have been 6,000 pips. Okay, that one buy right there would have been 6,000 pips. All right, and let me just correct this line up here. This was 21,081. That was the high for Monday. 21,081. That would be the high for Monday. And then I just move this up here so I can track my zones. So this was actually the range for Monday. This was the high. This was the low for Monday. Okay. If you're here from Friday, you held this trade out, that would have been a 6,000 people. Now, people say, why not sell? Well, I'm not saying that sales don't exist. As you see, this was a very nice sell. However, a part of being consistent, as I mentioned a few moments earlier, is that I maintain my bias towards the trend, and that's all I trade. So even if the market sells, I'm not confused. I mean, I'm not what may I say? I'm not confused with what's happening because I'm consistently trading the trend that's presented on the larger time frame. All right. So I don't have to worry about the sell, because if you take your profit here, anywhere in this region, you take your profit, you're good. And remember, for me, every day I just need 2,500 pips in order to double my account based on my lot size calculation ratio. 2,500 pips, I'm good. This move here from Friday all the way to the top was a move of 6,000 pips. So you get your 2,500, you're out of the market and you wait. So this sell went on. I'm not chasing the sells. I'm not chasing the sells. You're waiting. Price came down, you're in this zone, you're taking another buy. Notice it came up. However, it only made a lower high. Okay? If you're in the move and it came up and it made a lower high, even if you see it come up and it did not print a lower high, but you're in good profit, your target for the day, take your profits and wait. Trust me when I tell you. So let's look at the second move on Tuesday. Taking from the low all the way up to the high of the day, that move was another 6,000 pips. Right there. 6,000 pips. Okay? You only need 2,500. You take it from the low, wait until it makes the high. So Monday, Tuesday, that's 2 days of doubling your account. Okay? So which means if you started off with $1,000, you'd have been $2,000 on Monday. And by the time from here to here, you would have been at $4,000 on Tuesday. Okay? That's a good return on your investment. Okay, now that you make a lower high, the next thing that you do is you exit, take your profits, and you wait for the next higher low. Okay, again, this is where the move started. This is where it ended. That was a total of, let's measure from here to here. That was a total of 5,000 pips. You only need 2,500. Okay, which means, guess what? You come in on your higher low, it only went up and made a lower high, you're out. So this is Monday, Tuesday, Wednesday. assuming you only made the 2,500 pips. So Monday started with 1,000, you ended on 2,000. Here started with 2,000, you ended on 4,000. Here started with 4,000, you ended on 8,000. That's in 3 days. Okay. So now you're here, you take your profits, and now you're waiting again. Okay. You're waiting again for that move. Now, on this particular day, I actually entered a trade. Price came here within London session. Now, what I want to actually show you, notice that while the price was here at a higher low, and you came in on this price right here and it got here, notice nothing printed. However, that's one of the reasons why I mentioned to you, you have to watch all your time frames. So let's use the this tool right here, because I want to show you what happened here on this particular day. So price was here at a higher low. Excuse me. Price came up, it got here. Look at this point. On a smaller time frame, let's say your 50-minute, nothing printed. If you look at your half-hour time frame, notice a lower high was printed right here. That tells you that the market is still consolidating. So you get something like this, you take your profits and you, oh, this is actually this small move right here from this point. So I caught this move right at the bottom right here, came up all the way to up here. It's actually 2,200, well, all the way to the top, all the way to the top right here. You'd have gotten 2,500 pips. Again, that's enough for you to double your account. If your account is double within, and I mean, this candle right here, this is in 1 hour, in less than an hour, you'd have made 2,500 pips, doubling your account again for that day. Take your profits and wait. Okay. So, this is what happened on this day. So this move came up, it made a lower high. Let's go back to the 1 hour time frame. Okay. We came down and made a lower low right here. So even if you did not take your profits here and it came back down here, as long as you did not over leverage, you're good. Okay. You wait. Look at what the market did. It came up and it made a lower high right here. Okay. All right. Then after this lower high right here, it came down, it made a lower low on Friday. Okay. And this is where you ended the week. So let's measure the pips again to show you just taking the buys, not worrying about the sells. It's more than enough for you to actually make your targets on a daily basis by being consistently trading the trend. So let's do our quick recap. So the first trade was here. Easily, you would have covered it 2,500 pips, total of 6,000 pips. So that's day one. Okay. Day two, the same thing. Entering from there, covering here, right? 6,000 pips, you only need 2,500 pips. Okay. Here on day three, coming from here all the way to this point, you're at 5,000 pips, you only need 2,500 pips. Okay. Here, came in early because the higher low was here, but you came up to this point right here, you'd have gotten your 2,500 pips based on your entry. So if you took your entry here, oh, sorry, wrong side. So if you took your entry here all the way to here, you'd have been at 26. You need 2,500 pips. Take your profit and leave. Okay. And now you're waiting. So for the next day, look at what happened. You came here. As if you entered the trade that particular day before the session has ended. You'd have gotten 1,800 pips here at this lower high. Take your profits. Now you're waiting. Now price came back down all the way from here to here. And this is where it ended on Friday. You would have been at 4,000 pips on Friday. So you'd have gotten way more than enough to double your account every single day last week, if you're just taking buys. Okay. Again, not to say sell moves did not exist. A lot of sell moves actually existed. More sell moves than buy moves in terms of the number of pips that you would have made. However, like I said, the important thing is to remain consistent. Consistent. You have a strategy, trading the trend, you remain consistent towards trading that trend, and you'll be okay. All right. Now, key thing to note is that on Friday, your 1 hour actually broke structure and formed a new high. Granted, it's lower than the previous highs, okay, last 2 weeks. Last time it made a new high, you're previously lower. However, don't forget the fact that this lower low that was created, and I'll use this tool to mark it, this lower low that has been created here is actually a higher low, still a higher low on your weekly time frame. So again, your weekly time frame, despite the fact that it pushed down even more this week, your weekly time frame has still registered only a higher low. And your last 2 points on your weekly have been higher high, higher low, which means the market is still making higher lows to higher highs. All right. So that was the breakdown for this week. Again, I hope that you would have learned something that will actually help you to continually increase and to work on your psychology. And remember, I always stress the fact, guys, do not trade your live money until you're 100% confident and comfortable with the strategy that you're using. Remember, it costs nothing to use a demo account. And for those people who say, oh, it's not real money, my thing is, if you can't make money on a demo account, you'll never be able to make money on a real account. So again, guys, keep practicing, keep strategizing, keep reviewing. This has been the review for last week and everything. Doesn't matter what the market did with the sells. You're trading from your lows to your highs, taking your profits, waiting for your next low, trading to your highs, taking your profit, waiting for the next low, trading to the next high, taking your profit, waiting for your lows. Now, see what happens? Market actually came up on Friday's lower low, which is a higher low on the weekly, and broke structure before the market actually closed on Friday. So the next video that I'll be talking about is going to be the weekly analysis based on what I'm seeing coming up for the week that's ahead. So thank you guys again for watching. God, thank you again for your blessings and this opportunity to trade and review. Please be with us as we move into next week. Help us to all improve and to continuously improvise our strategies and learn patience. We thank you. We love you. Amen. All right, guys. Thanks for watching. See you next time.